Hey, it's Michael Saul, but everybody calls me Tiny, and this video is creeping our way to new highs. This is stock market analysis for the week of February 25th, 2019. If you would like to receive inter-week updates, go to www.attackthemarkets.com, put in your first name, your best email address, follow directions, and you will be on the distribution list. Facebook group can be found at facebook.com/groups/attackthemarkets. If you like what you're hearing, it would be so awesome if you could give me a thumbs up and leave a comment so I could move up the ranks in YouTube. And if you never want to miss a video when a new one is uploaded to the channel, press subscribe, and like all the youngins like to say, smash that bell and you'll be notified when I upload a new video. Okay, so let's take a look at what's going on in the market. Last week we crept a bit higher, didn't have a lot of dynamic big range days, but we did close higher. The S&P is getting closer and closer to this yellow line, and I think this yellow line is going to be important. It's a triple top. This would make it a quadruple top. Now, triple tops usually don't hold, so will the quadruple top, will the fourth test finally get us through? Now, I think we, this is kind of like Captain Obvious here, but I think we need to get through that yellow line in order to go to new highs. Well, duh. But I think how we get through the yellow line is going to tell us a lot about if we're getting to new highs sooner rather than continuing to creep up and take our time. And this is why. Around key decision areas, and whether that's key moving averages or whether that's horizontal or diagonal support and resistance, we always want to see how we act. Do we wind up here and then break through? Do we break through here, then pull back and test it, maybe kiss it goodbye, and then go higher? How we act is very important. Now, either of those two ways is the sign of a strong market. A strong market tends to grind. It doesn't have these big moves, these big range days. Yeah, sure, they show up, but not a whole bunch of big range days back to back to back. That is a market that's getting exhausted. A market that's taking its time is actually much stronger. Okay, it just takes longer to get where it's going. So what do we do with this yellow line? Do we bust through? Great. If we do, I want to see if we pause and then continue, pull back and then continue, or do we continue to just wind up here and then break through? So that's what I'm looking for as far as the upside on the S&P. For the Dow, which is out in front of the S&P relative strength-wise, we do have some resistance up here that we want to watch at 263 and change. Okay, this is the DIA. The Russell made it over the 200-day moving average. Hip, hip, hooray. First time since October of 2018 it closed above the 200-day moving average. Didn't close over it by much, but did get above it. Now, could it just turn from here? Sure, it could. It could turn back down. But let's see what it does here. Let's see, maybe it wants to grind a little before it continues to move higher. The mid-caps over the 200-day moving average for a couple of sessions. And the NASDAQ. So last week, I drew these lines in, this wedge here, and so we're still in the wedge. Let's see if we can get some acceleration out of it. Like I said, I don't want to see back-to-back-to-back big range days, although that would get us to new highs quick, but nothing saying we can't get some range expansion on the breakout and then a pause, and we continue to step up. Like I said, that's the strongest move that a market can make, a nice grinding stair-step type of motion. All right, let's look at some of the indexes, some of the sectors. Sorry, we just looked at the indexes. Okay, I do that a lot. I think I do that about 3 out of every 4 videos. I call the sectors the indices. Anyway, so the semiconductors are out in front, acting well here. Again, some resistance to deal with coming up, but so far, acting well. Here's NVIDIA. So NVIDIA is in a sideways consolidation. Do they have horizontal lines here? I think it's easier for me to just draw this in like this. All right, so nice horizontal consolidation here. All right, I mean, it's not perfect. You see a little push outs here and push downs here. But anyway, I'm watching to see what we're going to do here. If this is a bottom and we're going to release from here, we do have resistance up at the 195 area, and then we have the 200-day moving average. And if we wind up staying here and continuing to balance out, we could be in for a trip back down to the lower end. Okay, it's wait and see here, low end of the range at least. It's wait and see here on this stock. Here's KLA Tanker. We highlighted this last week. It had a nice release to the upside, so that's good. Next resistance up here at 119.55, then followed by 122.50. Intel trying to move. It's for the most part sloppy, but it had a little bit of movement last week. That's what we want to see. I'd like to see a pause here, and like I said, continuing to step up. How about the banks? Okay, the banks still got to get over the 200-day moving average, but they're trying their best. Here's Bank of America, still in some sort of consolidation here. I can adjust these like this. Let's see what we got here. There we go. I probably have to move this. I got a little trend line fetish here. I was going to say trend fetish, but no, it's a little trend line fetish here. Here's Bank of America. Here's Citigroup. Watch the 200-day moving average. Here's JP Morgan. Again, you got to watch the 200-day moving average. Here's Zion's. Now, this is Zion's Bancorp, and this is over the 200-day moving average. See, this is what I like to see. I like to see us break through and then pause. Why? Because now we know if we decide to take an entry here, and that's up to you, of course, it's your money, you know where you're wrong. Okay, so if you're looking to get on board here, and it does break and move higher, and then it comes back down below the 200-day, it's a tight stop. I always like, not only when risk is tight, because you can always make your risk tight depending on your stop loss, but I like when it's pretty clear-cut where the pattern is wrong. A lot of times you're like, well, should I buy off of this moving average, or should I wait till it goes to the moving average below, or the moving average below that? Next thing you know, you keep rolling out your stop loss, and next thing you know, you're taking a much bigger loss than you expected to. But when you could say, okay, this is a coil on top of the 200-day moving average. So if we release here to the upside, it's confirmed that we're going higher. But then if we come back down to the 200-day moving average, that's a good place for a stop out. All right, and it's just an example. Like I said, your money, you can do whatever you want with it. Here's Goldman. Goldman is just kind of dead. It's just, and by dead I mean the momentum is really low on it, right? Not dead like it's going to sell off, although it might, but it's just kind of sitting here. All right, let's look at the broker-dealer index. So, yeah, look at broker-dealers right at the 200-day moving average. Again, coiling on the 200-day moving average. Here's Morgan Stanley, also not really doing that great. Right, here's like Interactive Brokers, also pretty sloppy. How about like a Legg Mason? Yeah, like watch Legg Mason, see if it can get above its 200-day moving average. But notice the 200-day moving average is coming down at a pretty good pace. So you want to be careful there buying into that. I would watch to see if it gets a release through it, or it gets a push through it, then it coils up and then that releases. Let's look at some of the glamour stocks. So you got Amazon, who just sloppy here. Could it be setting up for a buying opportunity? I mean, it's under the 200-day moving average, so I can't get biased, but it is above its 50-day moving average, so it may decide it wants to play a little ping pong there. Maybe, pop out to the upside here, head to the 200-day moving average. I think there's better fish to fry. Here's Apple. Apple may be trying to wake up here again. Watch the 200-day moving average. Here's Alphabet. Sloppy. Here's Zuckbook. So Zuckbook, a.k.a. Facebook, all right, that's my little, I don't know. It's not really that funny, but I guess a little joke of what I call it. But anyway, this has been consolidating for a while. And this is great. The longer it consolidates, the more powerful the expected move can be. You can expect it to be. Sorry. So it's below the 200-day moving average, but it did hold the 20 EMA. And if it were to break to the upside, yeah, you got the 200-day moving average there, but if it could get a couple of days back to back if it decides to show some range expansion and push higher. It could also continue to form this consolidation, or it could expand to the downside. Remember, a lot of people, I got some emails when I was talking about watching this either way. They were like, well, isn't it bullish? I'm like, no, it's right on top of the 200-day moving average. It's more neutral than anything. And this pattern, this is a consolidation pattern. This is a contraction pattern. We want to watch for range expansion here. So, yeah, definitely keep your eyes on Facebook because it's ready to move. And, of course, news sensitive, see what happens. I mean, they had monster earnings when they reported, but since then really hasn't followed through on that. It came up a couple of days after, but since then it's actually below where it gapped up after earnings. Now, of course, it's still higher than where it was before earnings, but I don't know, just something to pay attention to with Facebook. Let's look at Twitter too, just sloppy. I get some questions on that. How about Netflix? Yeah, Netflix is in grind mode, right? Like the market. And if it were to continue to go higher, you got 387 and change up there to watch. Here's Tesla. Tesla looks lower to me, but I don't have a trigger here, so it's not a trade. It's just sloppy. It can stay in this big, ugly range, but that doesn't mean it can't go 30, 40 points to the downside. Again, I don't have a sell signal here. I'm just going off my initial read on it, so I'm not calling a short or anything like that. I just rather avoid it, right? There's just better fish in the sea. Here's Caterpillar, got over the 200-day moving average. Let's see what it does from here. Here's John Deere, headed to multi-month high, see if it can release to the upside and head up to the 175, 176 area. Let's look at bonds. All right, bonds are, let's see what bonds are. They're in a consolidation pattern here. Let's see. Yeah, so let's see what they're going to do from here. Are they going to release to the upside here and motor on with rates falling, or will they fall out the downside? Watch the 200-day moving average if that's the case. Here's oil. So oil is on a little bit of a rise here, kind of rising up. You got resistance right here at in the low 12s, and then you got the 200-day moving average just above 13. And gold, yeah, I mean, gold is now taking a little rest, but wow. I mean, this looks like a nice, steady uptrend, grinding, right? So you had a couple of pow, like expansion days. Then what did it do? It paused and stair-step, pow. Pause, see if it stair-steps again. Gold miners, same kind of deal, right? We highlighted this last week as well. So they're looking okay too, but it has to continue, right? It looks like, they're an uptrend. Yeah, on the short term, right? If we go like this, wow, it looks like an uptrend. But in the longer term, it's just gotten back to this big old mess of a range that it actually rolled down out of. So just, pay attention to that. All right, so let's wrap it up. I believe the market is going to try to move higher here as long as it continues to do so in a grinding fashion. While it may be boring, it's actually a strong sign. I want to watch this horizontal resistance on the S&P 500. I want to see what we do when we get there. Do we just blast through it? Do we coil up before we get through it? Do we break and then pull back? Those are the signs of strength, okay? And those are the safer ways of getting in. After a consolidation or after a break and a pullback, looking to get in at support, okay? Safer. I didn't say safe, okay? But just chasing momentum can be very difficult, and it could also wind up being very costly, all right? Any questions? I could be reached at tiny@attackthemarkets.com. Once again, if you like what you're hearing, give me a thumbs up and leave a comment. It would be just great if you did that so I could move up the ranks in YouTube. Any questions, give me an email. I'll talk to you in the intra-week updates or in next week's video.